Good morning, ladies and gentlemen. This is Butch Horak, Options University, Monday, September 16th, 2013. Welcome to Market Forecast. Access to this video is for informational and educational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Let's take a look and see what the previous week gave us in our four major indexes, looking at the Dow, looking at the NASDAQ, and looking at the Russell 2000. We shall see that we had another up week. And we see that if we look at the changes, all positive numbers here. Dow leading the way with a big whopping 3% change for the week. NASDAQ up 1.7%, S&P up 2%, and the Russell 2000 up 2.4%. So the Dow is lagging a bit and caught up this week. Looking at year to date, we see the Dow up 17.3%, NASDAQ up 23.3%, S&P up 18.4%, and Russell 2000 up 24.1% as the market just keeps right on moving along. Looking at economic announcements occurring in this coming week. Monday morning, this morning, we have Empire State Manufacturing Survey at 8:30, industrial production at 9:15, both before the market opens. And then we get to that famous week that occurs every 6 weeks or so, and we see the FOMC meeting begins on Tuesday morning. And we see also that we have a CPI coming out at 8:30. Then we have a housing market index coming out at 10 o'clock as we look at some important numbers to us as far as the market's concerned. Looking at housing stats before the market opens on Wednesday, and then of course that all-important FOMC meeting announcement coming out at 2 o'clock on Wednesday. Can it change things? Can it affect where the market's going to move? You bet it can. And so, while basically the FOMC has been very careful not to word things in such a way that it's had big effects on the market. You know, we have a number of things brewing. We got the Bernanke issue and his retirement. We got a couple other things going on. We got talking about working our way out of this very low interest rates. So if something did get said that was instrumental, could have an effect on the market this week. So certain amount of risk in the market until Wednesday. Thursday morning, 8:30, we got our weekly jobless claims, which come out every single week. And then we see that we have existing home sales, the Philly Fed coming out at 10 o'clock on Thursday. And then economic leading indicators at 10 o'clock. So big news coming out on Thursday. Quite a week as far as announcements coming out. And then, of course, we are in options expiration week, and this is quadruple witching which takes place this week. So we have that on Friday. So interesting week as far as economic announcements coming on, things that very definitely can move the market as we move forward. Looking at the SPX, we see that we had a nice move up for the last week and the week before that. And look at, we hit some resistance there at that 1688 level as we saw that we've moved sideways. Now the question is, are we going higher or are we going to pull back? Notice one of the things that did happen here is that we had a crossover here on the SPX, and when we have that crossover, the 30 going above the 50, which of course are both above the 200 down there, that is a bullish sign, expecting higher things coming out of the market unless some big news comes to change that. We have managed to make our way through Syria. Doesn't look like we're going to be bombing Syria, so that little threat has seemed to have gone away. Looking more carefully, we look at the market for the last week. SPX saw a big move up on Monday, a move up on Tuesday, move up on Wednesday rather, and then we see Thursday and Friday kind of went sideways. Wouldn't expect any big moves up prior to the Fed announcement coming in on Wednesday, so we may see ourselves move up just a little bit, but I don't expect us to go above previous highs till we get some kind of news out of the Fed as to where they're going. Look at the Dow, the big gainer for the week, up 3%. That's exactly what it looked like as it headed up and headed up every day, the leader for the week. Looking at the Dow Jones as we see us headed for previous highs. Next, let's take a look at the NASDAQ and look at we got to that high real quick, and then it went sideways for the 4 days of the week from Tuesday on. So NASDAQ up there in some blue sky area, and we're looking at some real nice highs there out of the NASDAQ. Are we going higher? Well, one could certainly say that the air should be getting a little thin up here. Time for a little bit of pullback. That's what markets do. Looking at the NASDAQ, the 30 is above the 50, which is above the 200. And finally, looking at the Russell 2000, we see that what's happening here. Look at this. We're looking at some kind of crossover there. Potentially hasn't happened yet, but we didn't see the strength out of the Russell that we saw out of the other markets. So with that thought in mind, although we had a nice move up on Monday, we didn't have a big move up the rest of the week as it went up in one big bunch on Monday. All right, next, let's take a look at the VIX. And looking at the VIX, we see exactly where we expect it to be. Market going up, should pull back, but notice, while the market's been going up for almost 2 weeks, we're still at about this 14 level. So there's a little more risk in the market, a little more premium for those of you that are option traders, premium that you can take advantage if you're a seller of options. So hone your skills, and if you are having trouble with those skills or would like refinement on those skills, you can get together with some of our coaches and some of our classes with Options University and certainly hone those skills to take advantage of the market as we're seeing this bullish trend continue. Looking at the bond market, we see we're still in that bearish market where we got the 200 above the 50, above the 30, approaching that 30 and 50 level here. And what you can watch for is this to come up here and then pull back again. As we see, we did develop some support down here with the bond market, but we're not showing any great strength, and we still have this downtrend. Remember, the trend is the trend until it ends, and so far this downward trend has not ended with the ETF TLT, which is 20-year Treasury bond ETF. Next, looking at gold, that's safe haven. We see we've had a bit of a pullback as the market pulled up, and so we've pulled back to some of those previous levels below the 50-day moving average on the gold market. Next, looking to see what kind of volume we had. Here's the last 5 days looking at the SPDR, which is the ETF for our SPX. And we see while this headed up and then went sideways for the rest of the week, we see that it was not done on great volume at all. As a matter of fact, it was done on rather low volume as we head towards quadruple witching taking place this Friday in the market. So let's take a look at the financials. XLF, we expect that to very much follow the Dow, follow the S&P. That's exactly what it did. We do again have the 30 above the 50, and we see that, we have the 30 below the 50, and so a bit of a pullback on the financials, but you see we did go sideways. Look very much like the Dow stock if you look carefully at it. Looking at oil, we see that we headed back up towards some previous highs, and so we've got resistance up at about this level. We'll see whether we head back up to that level. As Friday we had quite a day. It had a wider range day, but we didn't get a higher high and a higher low. We actually got a lower high and a lower low, but we're still well above that 30-day moving average, and notice how strong it finished as we went into the close. So looking at oil, we see that it's very near its highs. For those of you that are gold members, stick around. We'll take a look at our stocks to watch and talk about what effect the overall market had on those. And for the rest of you, if you'd like to see some other free videos, watch the little playback at the very end of this video, and you'll see where you can get some other free videos from Options University. So with that thought in mind, here we are, quadruple witching week, options expiration week, what some call that payday, and we see that the market has lots of economic announcements this week. The Fed announcement coming in on Wednesday, so lots of stuff happening, and we'll see what kind of effect that has on the market. With that thought, with Market Forecast, this is Butch Shorak, Options University, Monday, September 16th, 2013. And ladies and gentlemen, thank you for being here.